Before we start this video, do like and subscribe to our channel and not miss on any updates.
Okay. So now the next one, accounting standard 9, revenue recognition. On and off, we keep getting questions on AS9. The good part of this standard, I would say, is that it is again logical. There is nothing great for you to remember. Okay, if you understood the underlying logic, then it is very easy for you to handle the questions in the examination. Very important because revenue is the lifeline of the business. Revenue forms the most important part of the business. Without revenue, business cannot exist. Okay. Of course, there are some startups and all of that, or there are some initial stage research companies and all who exist without revenue, but revenue recognition becomes very important, right? Now, what does AS9 deal with? AS9 talks about when should we recognize revenue in the financial statement and the circumstances under which revenue recognition should be postponed. One is when, how, what amount should we recognize revenue? Second is what are the situations where we have to defer the revenue recognition? Okay, that is what is the crux of the standard. Then we'll talk about transfer of risk and rewards. Okay, then we'll talk about what happens when there is a bill and hold transaction, sell and consignment sales, commission sales, interest, dividends, etc. But first thing, what is revenue? This is important because if I am selling computers, if my business is selling computers, and I also use computers for office, which is PPE. Okay. Sale of this computer, the amount that I'll realize is called revenue, but this PPE, what is sold, that should not be classified as revenue. So that is where the definition of revenue also becomes very important. Now, what the standard says is revenue is gross inflow of cash. You have received cash, receivables, you have created a receivables, or other consideration. So what we are saying, either you will receive cash or you will create receivables, or there are other forms of consideration. So if I sell goods to you, or if I sell these classes to you, what did you give me? You paid me money. So what did I receive? I received cash. What will I pass an entry? Cash account to sales account. If you don't pay me cash, we don't have credit sales, by the way. It will become debtors to sales. So revenue is gross inflow of cash, receivable, or other consideration. Other consideration could be in form of other assets. The other party might give their share, they might give their investment, they might give some other asset arising from sale of goods, rendering of services. So either it is sale of goods, rendering of services, or used by others of enterprise resources yielding interest, royalties, and dividend. So used by others. Others are using what? Our resources, which will give us either interest, royalty, or dividend. Okay, so these are called revenue, right? Now, revenue is measured by the charges made to the customers or clients for goods supplied by the service or services rendered to them, and by the charges and rewards arising from the use of resources by them. So if I'm, let's say, if I'm banking company, or if I have given loan to someone and I've received interest, so that also becomes a part of my revenue. Okay. Now, once you have revenue, once we say that revenue has been established, or we need to recognize revenue for different transactions, how do we recognize revenue is the key question. First is sale of goods. If there is a transaction involving sale of goods, you will recognize revenue when performance have been achieved, when the following conditions have been fulfilled, or when there is a sale of goods, if the following conditions have been fulfilled, you can recognize revenue. Number one, seller has transferred to the buyer the property in the goods or a price. Seller, I am the seller. Okay, let us say I sell cars. I buy and sell cars. I am a seller of cars. I have transferred the property in the goods. Property means what? The ownership rights on the goods I have transferred it to you. I have transferred it to you by maybe entering into an agreement or by registering the vehicle in your name. We have agreed. Okay. And the agreement can be verbal, it can be oral, it can be written, it can be in any format. All significant risk and rewards have been transferred to the buyer, and seller retains no effective control of the goods transferred. This is by far the most important condition in revenue recognition. Others are also important, but here what we are saying is, once I have sold the goods to you, Once you have taken the delivery of the car, the risk, the rewards. The risk means, let us say the car gets damaged. The car meets with an accident. I pray it does not happen, but assume for a moment car meets with an accident. Then in that case, who bears the risk? You will bear the risk. Sir, no, I have taken insurance. Correct. But if the insurance company does not pay, you have to bear the risk. I will not bear the risk. So in that case, we say risk have been transferred. Now, what is this reward have been transferred? Rewards being transferred means who will get the benefit by using that particular asset? You or me, you will get the benefit. So if all significant, it may not be all the rewards, but significant risk and rewards have been transferred to the buyer and seller retains no effective control of the goods transfer. I don't have control. Means what? After I have transferred the car to you, it is you who will decide where to take the car, how to drive, whether to drive, not to drive. All of that you will decide. Can I come and say, you purchase the car from me, you cannot take it outside the city? I cannot say because I don't have control over the car. Right? So second one is that. Third, no significant uncertainty exists regarding the amount of the consideration that will be derived from the sale of the goods. Means there is no significant uncertainty. I don't have any uncertainty in terms of what is the amount I should receive and whether you will pay the amount or not. There is no uncertainty related to that. Okay. So if these conditions are satisfied, then we can recognize revenue from sale of goods. So when there is a sale of goods, things to remember, property in the goods have been transferred, significant risk and rewards have been transferred, seller retains no effective control, and there is no significant uncertainty. Right? If these conditions are satisfied, you can recognize. Then there are some specific circumstances. Again, this is important and you need to remember. Buyer requests delivery but takes title and access bidding, not request delivery. Buyer request delayed delivery. Okay, buyer request delayed delivery. Okay, so buyer has said, buyer has accepted the goods. Buyer has said, okay, this is the particular goods I want to buy. Title has been transferred. You have entered into an agreement. Accepts, billing has been accepted. Everything has happened. So we'll recognize revenue even if delivery is not made, ensuring that the item is held in stock, ready for delivery. So if the item is held in stock and it is ready for delivery, we have done the billing, customer has accepted the billing, the customer has said, yes, this is my property, but I am requesting you please hold. This is called bill and hold transaction. Then in that case, can I recognize revenue? Yes, if the risk and rewards have been transferred. So how do we test? Simple thing. If the product gets damaged, who is responsible? You or me. Okay. Now, to give you some examples, say you purchase goods from Amazon. When you purchase goods from Amazon, Amazon or the seller is obliged to deliver goods to your doorstep. Till the time the goods are delivered to your doorstep, the company cannot recognize revenue because the company has not fulfilled its performance, the risk and rewards have not been transferred. After the goods have been delivered, then after that return period gets over, then the company can recognize revenue. Okay, so you have to see at what point has risk and rewards been transferred. At what point has been the risk and rewards been transferred. If there are warranties, warranties meaning you buy a product, the company gives a warranty that the product will function properly. Goods have been sold, revenue will be recognized, and provision will be made for warranties. Okay. Then sale and repurchase agreement. Now, what does this mean? I have a car. I buy and sell cars. Today, I agreed to sell one car to you at 5 lakhs. And after 1 year, I agreed to buy the car back from you at 5,50,000. Same car. This is the arrangement. Okay. Now, if this is the arrangement, what has happened is I have sold the car to you. I'll buy the car back from you at 5,50,000. I sold it at 5 lakh. When I sell it to you, you give me money. And when I buy back from you, I pay you back the money. Okay. Now, this could also have been a loan transaction. I give my car to you as a security. You give me 5 lakhs today. I use the 5 lakhs for a year and then I give back 5,50,000. So what the standard says is look at the substance. If the car has been sold, and again, if I'll buy back the car, means significant risk and rewards have not been transferred. And effectively, maybe I will be the owner, I will be the legal owner, I will be controlling how you use the car. Because in substance, I have given the car to you as a security. So here, buying and selling is not happening. Here, what is happening? Though I'm saying I've sold the car, it is more like I have given my car to you. You gave me 5 lakhs. It's like a loan transaction. I have taken a loan. After 1 year, I'll give you 5,50,000. So this becomes a financing transaction. This becomes a financing transaction. All right. So where a seller concurrently agrees to repurchase the same goods at a later date, it would amount to financing arrangement, and hence this will not be treated as. Then, if goods are sold subject to installation and inspection, I purchased an AC. The other party has agreed that the other party will come and install the AC, only then the goods will be accepted. Then in that case, revenue will be recognized only when the customer accepts the delivery and installation. Okay. Then if there is something like a guaranteed sales or unlimited warranty, then in that case, what you have to see, what is the substance of the agreement? Okay. Generally, what you will do, you will recognize the revenue, but make a provision based on past claims. That is for guarantees, right? So when there is a sale of goods, what you have to see is, has the property been transferred? Has the risk and rewards been transferred? Has the title is not mandatory. Title is not mandatory, but still, has the title been transferred? And is there any uncertainty? If the property has been transferred, risk and rewards have been transferred, I don't have any control, and there is no uncertainty in relation to the consideration that will be received, then you can recognize revenue from sale of goods. All right. Then coming to rendering of services, this has a close relationship to Accounting Standard 7, which we'll take up subsequently. When we talk about services, for example, accounting services, security services, bookkeeping services, consultancy services, mobile phone services, all of them. Now, when it comes to services, you can recognize revenue either using proportionate completion method or completed service contract method. Okay, depending on the nature of the transaction. What is the proportionate completion method? For example, I have taken 1 year consultancy. I have taken 1 year consultancy from a particular company or a particular lawyer or a CA. Now, this 1 year consultancy comes to me at 1,20,000. Now, what I can do is every period, every month, I can say that the chartered accountant who has provided me the service, they can recognize every month 10,000 rupees as their revenue. Okay, that is one way. Or if, for example, I'm taking this live classes. Okay, we have agreed for 50 hours of live classes. It will exceed 50 hours by about maybe 6 or 7 hours. 50 hours of live classes, right? Now, this 50 hours of live classes, let us say till 31st of March, only 20 hours have been completed and 30 hours will be completed subsequently. So what I should do, only 20 out of 50. So let us say if for simplicity of calculation, class price is 1,000 for calculation purpose. So what I will do, 20 out of 50, that is 400. I will recognize in current year and balance I will recognize in subsequent period because I have only completed 20 hours. That is called proportionate completion method. Okay. Now, in proportionate completion method, we will recognize P&L proportionately with the degree of completion. How much has been completed? Now, construction also, when we come to construction contract, how much area has been completed? How much percentage of the work has been completed? Accordingly, the payment is done. Accordingly, the revenue is recognized. Right? Now, if there is a service, for example, just for example, I want to buy a particular customized software. Okay, that is a service that is being provided. Now, there only when the software is completed, installed, tested, and all of that, only then the revenue can be recognized. That is used where it is a completed service method or completed service contract method. For example, auditing services. Now, if I'm doing the statutory audit, can I say every month you have to, I'll recognize revenue? No, you will recognize revenue only when the service has been fully completed. Now, completed service method is used when there is one act or which has to be completed. Proportionate is used when it is series of acts. Not only one act, continuous basis the performance is happening. Okay. Performance consists of execution of more than one act, and revenue is recognized proportionately with reference to performance of each act. So for services, you can use proportionate service completion method or proportionate completion method if there are series of acts. If there is only single act, finalization of accounts, lawyers related service. See, lawyer also depends. If it is monthly, then you can use proportionate completion method. If it is linked to one specific act, you can do completed service contract method. Telecom services and all. Okay, it is provided as a series. It is not provided as a single event. There you will use proportionate completion. Now, some examples: advertising agency. I run an advertising agency. So commission is recognized as revenue when an ad appears in the designated media. So I would have agreed. I will place 10 ads for which I will charge 20,000. Based on how many ads I have placed, I will recognize revenue. Now, another thing you have to keep in mind is, as far as GST is concerned, the levy of GST and all of that will happen as per the GST provisions. Okay. Then insurance agency commission. So insurance agency commission again will be based on the effective date when we have issued or renewed. So whenever there is a renewal, I am entitled to the commission, I will recognize revenue. Okay. So that is as far as services is concerned. Then agency. So this also is typically tested in the examination as a question. Agency. For recorded classes provided, completed service method is used. No, again, there is proportionate. See, for recorded classes also, there is a validity. You purchase a class till May attempt, or you purchase a class till January attempt, right? So if you are purchasing till May attempt, let us say you purchase now till May attempt. So first 2 months, till 31st March, whatever is the period, this year, and for April and May in the subsequent. Okay, but let's say you purchase books. The moment the books are dispatched and the books are delivered, we are liable to deliver it to your doorstep. That time the revenue will be. Okay. Then agency relationship. So the agency happens when there is a principal and agent. Sir, what is principal agent? So principal, let us say, send goods to agent. The agent sells. Okay, generally you would have heard of consignment agent and all of that, right? Now, ownership is with the principal only. Agent does not get ownership. Agent doesn't get any control. Agent only has possession of those goods. Now, let's say goods are worth 1,000. Agent gets 2% commission. So when the agent sells it to the customer, the agent collects 1,000. 2%, that is 20, he will retain, and balance amount will be transferred back to the principal. Now, the revenue for the agent is only 20, not gross amount. So, whenever there is an agency relationship, the revenue is the amount of commission, not the gross inflow of cash receivable or other consideration. Okay, so the risk and reward remains with the principal. The control remains with the principal. The principal decides how much price is to be charged. The agent is merely acting as a facilitator. So agency commission will only be restricted to the amount of commission. This keeps on getting tested in the examination. Okay, then whenever we talk about something like interest is basically what you have given loan to someone. This will be used, recognized based on time. Royalties is charges for use of assets, and dividends is rewards from holding the investment. Okay. Now, interest basis of time, royalty based on usage, and dividend when there is a right to receive. When do we get the right to receive? When the company declares and it is approved by the board of directors in case of interim dividend and by the shareholders in case of final dividend. Interest on time proportion basis, royalties on accrual basis based on usage, dividend when there is a right to receive the payment. Okay, then whenever we have sale of goods and delivery is delayed at the buyer request and the buyer takes title and accept billings, we will recognize revenue. Sale on approval basis when it is approved. Goods subject to installation and inspection once it is accepted. Sale and repurchase agreement, we have to see if it is a finance part. Trade discounts and volume rebates, this will be reduced from revenue. Cash discount, not reduced. Consignment sale, principal, gross value, agent, commission. And in case of consignment sale, revenue will be recognized by the principal only when the agent subsequently sells it to the customer. The key thing to ask is whether the risk and reward have been transferred or. Then effect of uncertainty is very, very important. What is the meaning of that? If there is any uncertainty related to, let us say, collection, then the revenue recognition has to be deferred. So if there is uncertainty regarding the ultimate collection of revenue, recognition is postponed to the extent of uncertainty involved. Meaning to say, I have entered into a contract with you. That you will pay me some specified amount every month. Okay, every month you will pay the specified amount. So what happened? In April, I recognized revenue of 10,000. In May, I recognized revenue of 10,000. In June, you have come up and said that the payments will not be made. Even the past payments will not be made. And even for June, the payment will not be made. Okay, now what happens? April and May, I have already recognized revenue. Here I will create bad debt. June, there is uncertainty related to collection. So when there is an uncertainty related to collection, I will not recognize revenue. Sir, can we reverse this revenue? No. Revenue which has been recognized, you will continue to show it at revenue. Any subsequent changes in the circumstances, any subsequent uncertainties that have come, then you will recognize a bad debt. So when the uncertainty relating to collectability arises subsequent to the time of sale or the rendering of service, a separate provision is created to reflect the uncertainty rather than reversing the. This is very important. Questions have been continuously being tested from this dimension. Okay. Then AS9 does not deal with construction contract. Lease, this is covered by Accounting Standard 7. Lease agreements covered by Accounting Standard 19. Government grants and other subsidies, as we learn in Accounting Standard 12, and insurance contracts of insurance companies. Then some things which are not included in revenue, you have to keep in mind. One, gain on holding or disposal of non-current asset. Okay, so realized gain or unrealized gain, if at all there is any, on non-current asset. So let us say I have a building. For that building, I have used the revaluation model. And because of that, there is a gain. That gain is not called revenue. Or I have sold the building. The amount that I will receive from selling the building is not my revenue. Okay, only the loss or gain will be recognized as per Accounting Standard 10. Then unrealized holding gains from change in value of current assets and natural increase in agriculture and other product, not very important, but simple thing could be inventory. I have inventory of, let us say, copper. Copper prices increase in the market. Can I say the increase in the copper price is my revenue? No. Only when you sell it, then I can call it the revenue. Realized or unrealized gains from changes in foreign exchange rates, adjustment arising on translation of foreign currency financial statements. This we have learned in Accounting Standard 11. So if there is a realized gain, I sold goods, customer has to pay me $1,000, dollar appreciated, rupee depreciated. So I am receiving more amount. Now, can this change in foreign exchange rates be considered as my revenue? It cannot be considered. Okay, then. Realized gains on discharge of an obligation at less than its carrying amount. I had to pay you 1,000. I settled the transaction at 800. The 200 is not my revenue. It cannot be called my revenue. Unrealized gain from restatement of carrying amount of obligation. If I have changed the provision value, liability value, these are not considered to be. Okay. So again, this particular standard is more of writing the answers. Okay, calculations very rarely they have asked. It is more about writing the answers. Yeah, in the September 24 attempt, there was a very good question on MCQ. Okay, how much of revenue should be recognized? That was good, but otherwise, fairly simple standard. 5 marks question. Delivery is delayed at buyer request, but buyer takes title and accepts billing. Already we have discussed. 1 mark. So what you have to do? You have to explain also. So how will you explain? if the delivery is delayed and the buyer requests, buyer takes title and access billing, revenue should be recognized notwithstanding that physical delivery has not been completed. So delivery is not the condition to be checked. We have to see whether the risk and rewards have been transferred. So before writing this answer, give a small explanation that revenue should be recognized when risk and rewards incidental to ownership has been transferred, as long as there is every expectation that the delivery will be made. However, item must be on hand, identified and ready for delivery to the buyer at the time sale is recognized. So this basically, you have learned in Sale of Goods Act also. You should not forget what you have learned. Okay, same thing. So the goods have to be identified, risk and rewards have to be transferred. The seller does not have control. Now, seller does not have control means, for example, I have this pencil, just for example. Okay, this pencil I have identified with a particular serial number and I have said, okay, I'll buy this pencil. This has been kept aside. Now, the seller cannot sell this pencil to anybody else. If the seller can sell this specific pencil to somebody else, then seller has control. So if it is identified, the seller should not have any control after the sale has been made. Installment sales. Now, in case of installment sales, what happens is you will receive amounts in installment, but the transaction, the property has been transferred, so revenue will be recognized. Trade discounts and volume rebates. Trade discounts and volume rebates are not encompassed within the definition of revenue since they represent reduction of cost. Trade discounts and volume rebates given should be deducted in determining revenue. Okay, received or given. So here they were not clear. Received is not revenue. Given should be reduced from revenue. Insurance agency commission, you will recognize only the commission portion, not the gross value, as and when the policies are issued or renewed. Advertising commission should be recognized when the service is completed. Okay, so this you can have a look at it. And you may not be able to write so much of content. Okay, this content itself will be around 1.5 page. But for every point, you should say whether revenue should be recognized or not, and why it should not be, or why it should or should not be recognized. This was asked as an MCQ for 2 months. Okay, here it is only for 1 month. On 15th of November, goods worth 5 lakhs were sold on approval basis. The period of approval was 4 months, after which they were considered sold. 15th November plus 4 months means December, January, February, March. So the cutoff date is 15th of March. Buyer sent approval for 75% goods up to 31st of January and no approval or disapproval received for the remaining goods till 31st of March. Now our period ends on 15th of March itself. So when the period ends by 15th of March, it is assumed that buyer has approved. So entire 5 lakhs should be recognized as revenue, because the time period for rejecting the goods have expired, right? Then on 31st of March, goods worth 2,40,000 were sold to Bright Limited, but due to refurbishing of their showroom, on the request, goods were delivered on 10th of April. Delayed delivery does not mean you have to defer the revenue recognition. If the risk and rewards have been transferred, physical delivery is pending, you can recognize revenue provided the goods are identified and the buyer has accepted the billing. So the entity should recognize the entire sale. Rainbow has supplied goods for 6 lakh to Sham Limited and concurrently agrees to repurchase the goods on 14th April. Now you have sold, you have agreed to repurchase, means control is not passed on. Effectively, it is a financing arrangement and hence no revenue should be recognized. Dew Limited used certain assets of Rainbow Limited and Rainbow Limited received 7.5 lakhs and 12 as interest and royalties respectively during the year 2021. So this should be recognized as revenue. Okay, how should you recognize the revenue? This interest on time basis, royalty on accrual basis. On 25th December, goods of 4 lakhs were sent on consignment basis, of which 40% of the goods unsold are lying with the consignee as at year end. So 4 lakhs into 40%. This is 1,60,000. This 1,60,000 is still lying. So how much has been sold? 60% has been sold. That is 2,40,000 has been sold. So 2,40,000, if it has been sold, you can recognize revenue up to 2,40,000. 5 marks. Such a simple question. Okay, this one 5 marks question. A Limited sell goods with unlimited right of return to its customer. The following pattern has been observed. So generally what happens is if there is a right to return which is unlimited kind of a thing, then and for all the customers you are giving, you make an estimate of how much returns are expected. Okay. Time frame of return from the date of purchase between 0 to 1 month, 6%, between 1 to 2 months, 7%, between 2 to 3 months, 8%. The company has made sales of 36 lakhs in the month of January, 48 lakhs in the month of February, and 60 lakhs in the month of March. The total sales for the financial year have been 400 lakhs and the cost of sales was 320 lakhs. You are required to determine the amount of provision to be made and revenue to be recognized as on 31st of March. So actually, this includes AS 29, but we can quickly, discuss what is the value. So now sale value, January is 36 lakhs, February is 48 lakhs and March is 60 lakhs. Right? Now, what is the likely return? Between 0 to 1 month, 6%, 1 to 2 months, 7%, 2 to 3 months, 8%. And we are talking about what? 31st of March. Okay. So, let's erase this part. So sales is 60, 48 and 36. I don't know what happened. 60, 48 and 36. So sales that have been made in January 36, February 48, 60. So if you look at the total sales comes to 144 lakhs, right? Now, the period of return, what they're saying is how much return will happen within 0 to 1 month, 6%. So sales that are made in March of 60 lakhs, you will get 6% return. So likely return is 3.6 lakhs. Likely return is 3.6 lakhs. Okay, then February sales made is 48. So total sales in the previous 2 months, that is from February and March, is 108 lakhs. And between 1 to 2 months, 7% sales are expected to come back. So 108 into 7%, you get 7.56. Then for January sales, 3 months have passed, right? January sales, 3 months have passed. So there is January, February, March, 3 months would have passed. So cumulative return is 8%. So 144 into 8% is 11.52. This is the likely return. Likely return is how much? 22.6 lakhs. That is the first thing. Second, total sales is 400, cost of sales is 320. So if total sales is 400, cost of sales is 320, your gross profit is 80. This is nothing but 20%. So 20% of profit is what is likely that you will not be able to receive, and hence you will make a provision at 20%. Okay, so profit, whatever is the profit portion, you should not recognize that profit because there is an expectation that you will have sales being returned or the customer will return the goods. Revenue to be recognized in respect of sale of goods is recognized fully at the time of sale, assuming that the company has complied with the conditions stated in AS9 relating to the recognition of revenue. So revenue will recognize accordingly. As per AS9, in a transaction involving the sale of goods, performance should be regarded as being achieved if the following happens. Property has been transferred, risk and reward have been transferred, no significant uncertainty. AS9 also provides that in case of retail sales offering a guarantee of money back if not completely satisfied, it may be appropriate to recognize the sale, but to make a suitable provision for the returns. So how much returns will happen based on that? Make a suitable provision. Therefore, 36 lakhs, 48 lakhs and 60 made in the month of January, February and March will be recognized at full value and revenue at 400 lakhs, and 20% that the profit that you will not be recognizing, that part will be provided as your provision. Sir, why not full reversal? See, what you need to understand is, if I sell goods worth 100 and if you come back with that goods after 1 year or after whatever is the period, if I give you goods worth 100, when you come back, I'll get the 80 of cost back. So basically the profit portion I should not be recognizing. That is the logic for making this provision of 20%. Okay, this is a typical question, has not been repeated subsequently again, but it is a good question for practice and writing in the examination. Why did we take January 8%? Because January, February, March, 3 months portion, 8%, 7%, and 6% we have done. This is again same trade discounts and all we have discussed. Delay delivery, sale or approval basis. So here one student had a question, not this one, in September 24 examination when I did the MCQ. The question said 3 months. Now, should we, if goods are sold on 1st of January, if goods are sold on 1st of January, 3 months period, does it end on 31st of March or 1st of April? Okay, that was the confusion. Typically in businesses and all, when you say 1 month or selling on the 1st of the month, it will end at the last day of the month as 1 full month. Okay. Technically speaking, it can end on 1st of April also. I'm not disputing that, but that is how generally you will take the assumption when you write the examination. Okay, so again, similar concepts are being tested time and again. Important in this particular chapter and accounting standard 4, accounting standard 5, and accounting standard 9. Theory is very, very important. What you write as the explanation is very, very important. So what do we need to learn for that? What you need to learn for that is this condition of sale of goods, very important. Then services, they will not test frequently. How do you recognize interest, royalty, and dividends? This is important. Then effect of uncertainty. Then how do you answer bill and hold transaction? For example, buyer request delay delivery, but accepts title and accepts the billing, accepts the title. In that case, what is to be done? If there is a sale on approval basis, then what is to be done? Now, one more thing what you have to understand is sale on approval basis is different from general return right that you are giving. Sale on approval basis means what? Only when you approve, I will recognize the sale. Sale with the right to return. You have accepted the sale, but I am giving you an unlimited right to return, kind of a warranty or a guarantee contract. In that case, you will make the provision for the return or the expected returns. Okay, so that is how you will do the questions. Go through all the questions in the study material and go through all the questions in the compilation that we are providing and also in the notes that we have provided. Any question you have on this, you can feel free to ask. But again, writing is very, very important, especially if you get those 5 bits, 2 bits, 3 bits, you should try to ensure that at least 2 of them are correct. If you get 3 bits, at least 2 of them are correct. Okay. Financing arrangement is also important. Sir, when will I get the access to last Saturday class in app? Law was conducted, accounting was not there. Okay, there was a communication issue from our side only. The file is being edited today or tomorrow. It should be available for law. Accounting class was not there. So please be in the group. I'll be posting messages if at all the class is not there. Okay, and accordingly you can access the class. Right? Any questions in this? No questions? Okay. So generally, I want to ask, we have covered so far a lot of standards. 2 is done, 4 is done, 5 is done. Okay, then 9 is done, 10 is done, 11 is done, 12 is done, then 16 is done, 19 is done, 22 is also done. Do you think your confidence has improved or increased, or these classes have been helpful in your preparation for the upcoming exams? I want honest feedback. Okay, so that or you want me to say you ask me more questions, I'll do selected questions separately. That I don't want to mix it up here. But do you think that these classes have added decently to your preparation for the upcoming exams? You can type it out, or if you want to speak, I'm just you can unmute and speak also. Guys, you can speak. Okay, right. The discussion part with the students is not uploaded. Okay, Doubts will be uploaded. All this towards end wala part will not go. Okay, great. Then one more thing. Okay, I'm teaching. You are attending the classes. If you are missing, you are going back and watching the recorded. That is perfectly fine. Your practice at your end is also very, very important. Okay, I will teach. I've been teaching this for so many years. I'll teach. I will explain shortcuts, how to understand, what to do. Practice is very, very important. And one other thing, what I want all of you to do is don't aim for that 100% perfection. Everything I should know. This question bank, that question bank, this compiler, that compiler. Don't overburden yourself. If you see most of the questions, generally you'll be able to answer. Okay, with that confidence is how you should approach this thing. Not only in my subject, in any subject. Students who have tried to achieve 100% perfection, even I'm telling you, even those who have got ranks, they have not got 100% perfection. Okay, they have not got. Right? For example, just my example, I'll tell you. This question is there, right? Sale and purchase arrangement. We discussed just now. Where is it? The sale and purchase repurchase agreement. This was a question for 6 marks in CA final. It was not on concept, it was with some numbers, and I forgot the concept. Okay, so don't be too harsh on yourself that no, I should get everything, and I should understand everything. That should not be the idea. 90-95% are you comfortable with the subject? If that is there, examination you will be able to. Okay, so we'll conclude here and we'll continue tomorrow. Okay, sure. Thank you.